Welcome to Brief Briefing. 500 million in crypto futures liquidated as Bitcoin dips below 34K. What happens next? The cryptocurrency market saw over 500 million worth of positions liquidated in the last 24 hours as Bitcoin slipped below $34,000. Currently, Bitcoin is sitting at $35,602. Those are very quick moves, wouldn't you say? Roughly 500 million worth of cryptocurrency futures positions were liquidated in the past 24 hours. The mass liquidation of positions happened before the price of Bitcoin dipped below 34,000 on January 17th. Brought to you by Cointelegraph. This is not investment advice. This is pure entertainment. I'm here to entertain. Why were so many positions liquidated overnight? The price of Bitcoin rose by 6.7% from $35,500 to nearly $38,000. Meanwhile, the futures funding rate sharply increased, indicating an over-leveraged market. Across major exchanges, the funding rate of Bitcoin perpetual swap futures contracts surged to around 0.07%. Considering that the average funding rate typically hovers at around 0.01, the futures market was overcrowded on the way up towards that $38,000 mark. As such, Bitcoin's price began to drop when several large sell orders hit the market at just above 38,000. Overheated futures markets further intensified the correction. And that is why 500 million got liquidated. Why buy futures when you can just buy Bitcoin? No one knows the future. Bitcoin still sitting at that 35,000 mark, looking good. Ethereum above 1K. Tether still exists. Polkadot 17, XRP, it's still there, maybe not for long. Cardano 37,000. Sorry about that. 37 cents, 13%. I was dreaming. A $37,000 Cardano one day, but not today. Litecoin $143. Cardano jumps 20% in bullish trade. Investing.com. Cardano was trading at 0.38 by 2100 on the investing.com index on Sunday, up 20.3% on that day. It was the largest one-day percentage gain since January 6th. The move upwards pushed Cardano's market cap up to $11.788894 billion, or 1.16th of the total cryptocurrency market cap. At its highest, Cardano's market cap was $27.917 billion. Cardano had traded in a range of 0.34 to 0.38 in the previous 24 hours. Over the past 7 days, Cardano's seen a rise in value as it gained 13.54%. The volume of Cardano traded in 24 hours to time of writing was $4.583816 billion. 3.38% of total volume of all cryptocurrencies. It has traded in the range of around 23 cents to 38 in the past 7 days. At its current price, Cardano is still down 71% from its all-time high of $1.35, which was set on January 4th, 2018. Ethereum competitor Near Protocol gains 106 as DeFi heats up. It's getting hot. In the past month, Near Protocol rallied 106% as the DeFi market captured the attention of new investors. Near Protocol is a smart contract platform that uses parallel processing to scale the network. This technique, known as sharding, resemble what E2 is aiming to achieve, and Near's proof of stake consensus mechanism also allows token holders to stake their coins. In the past month, Near has rallied by 107%. And this has raised questions on whether the project is making significant strides in what has become an ultra-competitive smart contract industry. Compared to this competitors, Near is a relatively new project, as the mainnet only launched in April 2020. Unlike Ethereum, Near's consensus mechanism works towards fee stabilization, and according to its website, the protocol aims to accelerate the development of decentralized applications. Interestingly, Near's CEO took place 4 months after its mainnet launch. A possible reason for this is that the team has raised $35 million in private funding rounds held in July 2019, May 2020. Amongst its investors are Andres Horowitz, a 16Z crypto investment, Pantera Capital, Electric Capital, and Ripple Incubator X Spring. Over the past 3 months, Near's protocol network activity has increased significantly, and information on the Near blog shows there are a couple of exciting applications already live. DeFi integrations accelerate. On November 24, 2020, 1inch exchange-backed project Mooniswap revealed their plan to build automated market-making features on Near. The decentralized exchange aggregator is designed to roll liquidity and pricing from all significant dexes into one platform. Serge Kuhn, CEO, co-founder of 1inch, stated, "By building on Near, we'll be able to experiment with sharding and be prepared for the arrival of Ethereum 2.0. On January 19, Crypto.com also intends to launch a new pool, offering 255,000 worth of Near tokens at 50% below the market price. Clients will need to stake CRO tokens and also meet the set trading volume requirements on exchanges. One area of concern is there are open questions regarding how the community treasury is governed. A substantial number of Near tokens are being managed by a handful of people who are not required to abide by any clear guidelines or rules." Crypto exchange Kraken prepares to halt all XRP trading for U.S. residents. The San Francisco-based, but likely not for long, cryptocurrency exchange Kraken is joining dozens of companies that are dropping support for XRP. The exchange cites the SEC's lawsuit against Ripple, which accuses the company of illegally selling XRP as an unregistered security, as the reason behind its decision to stop all trading of the cryptocurrency asset in the United States. They were dumping a significant amount of XRP on the market every month. Anyone who saw that should have realized that this was gonna happen. That's why, do your own research, people. Another court applies the Howey investment contract analysis to crypto. The ruling on the motion to dismiss in the SEC versus NAC case indicates that the SEC still has crypto sales in its crosshairs in 2021. They gotta get money from somewhere, people. On June 25th, 2020, the United States Security and Exchange Commission brought suit in the Northern District of California against NAC Foundation LLC, also known as the National Aten Coin Foundation, and Roland Marcus Andres, the company's CEO, alleging that the company had violated the federal securities law by selling an unregistered pre-functional version of anti-money laundering Bitcoin tokens to be known as AML Bitcoin. Unlike some of the other recent high-profile decisions applying to Howey tests, such as SEC versus Telegram or SEC versus Kik, the NAC lawsuit involved detailed allegations of fraud in connection with the sale of pre-functional tokens. Andrade was also indicated by the Department of Justice on charges of fraud arising out of offering, and Jack Amfert, a federal lobbyist, pled guilty to participating in the fraud. On January 8, 2021, Judge Richard Schimborg of Northern District of California rebuffed NAC and Andrade's motion to dismiss, finding that the SEC complaint had sufficiently alleged that there had been an unregistered sale of securities under the Howey's investment contract tests. That's why try not to invest in pre-sales. Research everything you do very effectively and analyze any airdrop that you receive. Don't forget to like, subscribe. Take care now.